Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 6th until the 10th of June. Now before we dive into the webinar, the key highlights of the week was the US inflation report, which hit a 40-year high, causing stocks across the continent and overseas to tumble. As always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So looking at stocks, first thing first, we had the three major US indices. For those who don't know, those are the Dow Jones 30, the S&P 500 and the Nasdaq 100. All three of them were down in triple digits territory on Friday and more than 2% each after we had the US inflation report showing a reading of a 40-year high. Now, at the time of recording this webinar, the Dow Jones is down by 2.89% or 936 points. The S&P is down by 3.11% or 125 points, and it was actually the worst week since January. And then we had the tech-heavy Nasdaq, which was down the most by 3.72% or 459 points. Now, we can also see this from the actual charts themselves. So if we look at the Dow Jones first, we can just search it by typing in US 30. And I'm going to switch it just on the daily so you can see what I'm talking about with regards to the impact. So you can see the day here, it's actually the second consecutive day which is deep in the red. So overall the week it was quite a substantial drop. Next up it was the S&P 500. You can just type in US 500 and you can see pretty much a similar picture being painted here. And lastly, we're going to look at the tech heavy Nasdaq, which for this one you can type in US tech and we can just pull it on the chart and you pretty much see it's more or less the same picture across all three US indices. Of course, they don't always go hand in hand. However, when you have a major report affecting the whole continent, then you can expect the movements to be quite the same across the board. In terms of individual stocks such as Apple, Microsoft and Amazon, they all fell by 3.5%. That was Apple, then 4% was Microsoft, and then Amazon was the worst, it fell by more than 5% on the day. So pretty much it was a short seller's day today. Only a few stocks were able to actually finish the day in the green, but most of the major stocks, they were down in the red. Now moving on to Forex, we're going to have a look at the dollar index first. I'll pull it on the chart. So you can see it had yet again quite a strong week. It rose actually by almost 2% on the week. And it's now, if we look at the chart, it's close to retesting the highs from 2-3 weeks ago. And with the addition of the terrible CPI report on Friday, which we discussed earlier on, it could also set the precedent for the Fed to reconsider the rate cycle and introduce an even more aggressive policy, which could in turn mean that we get much further hikes throughout the rest of the year. Next week, we're also going to have the Fed interest rate decision, which ties in perfectly with the fact that we had the CPI report today. So obviously, we might get some hints with regards to what they're planning to do, and obviously some mentions with regards to the inflation report that was released earlier today. Now, further rate hikes could of course mean further strength for the US dollar due to the high yields, and obviously it's going to make it even more attractive, so we could see it being boosted in the next couple of days, depending again on what the Fed comments on the interest rate decision. Now, all of the major pairs, they were down against the US dollar, as one would expect. But some of the notable ones were, first of all, the Australian dollar US dollar. The Australian dollar US dollar, it was down by 2.2%. And we can see that this is pretty much its third consecutive day in the red. So we could see, the next possible area of key structures around these levels, which is currently going to head into looking at next week. And then we also had the New Zealand dollar, US dollar, which was the other one. It fell by 2.26%, but again, we can see it's pretty much posting consecutive days in the red. And again, it's more or less like a similar picture as of that to the Australian dollar, US dollar, in the sense that we have this key structure level that we could tap into moving into next week. Now, lastly, we're going to move on to the commodities, and we're going to have a look at gold first. Now, from the fact that the US dollar rose quite strongly throughout the course of the week, one would expect that gold prices would actually be down on the week, seeing as how they have the inverse relationship. However, with the flurry of negative reports, which it wasn't just the US CPI report, we also had the OECD slashing its global growth forecast from 4.5% to 3% last week. So it seems that the investors still favored the yellow metal, and which is why we still had a positive move throughout the week. Gold prices rose by 1.11% or $20.57. And lastly, as far as oil prices, now those, they also rose similarly to gold, but not by as much, I would say. It was actually more or less unchanged on the weekend. It's now, as we can see, now that we're recording the webinar, it's actually turned red. But when I checked the charts earlier on, it was up by only 0.11% or 10 cents. We did have Saudi Aramco also raising its prices towards Asian customers, a sign that could indicate increasing demand. But the strong rally of the US dollar kept a cap on further growth during the week. And as we said, now it's pretty much turned red. With that being said, prices are still trading back towards the highs of the year, which are all the way up here at around 126. And we're now at 119 more or less. So we're trading back towards those highs. And actually it came back from a pretty decent run, as we had 6 consecutive weeks in the green before posting this slide red week on this occasion. And yeah, there you have it. This as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you on the next one. Till then, trade safe.